I want to get to London right now. Luke Ellis is the CEO of Man Group. This is one of the largest investment firms in the world with nearly $120 billion under management. Luke, we want to get your thoughts on how to think about this market during what has turned into a global panic at the very, very least. What are you doing?
Good morning, all. Well, I've got to say, we have some of the biggest computer trading strategies, so I'm aware of a number of things that we were just talking about. Look, I think the first phase of this was getting out of risk. You know, the oldest trading rule is the first cut is the cheapest. And a lot of people came into this move with a lot of risk. Once you started to worry about the virus impact on actual economic activity, getting out of that risk very quickly in equities made sense, because the first week was where there was the liquidity. This week, liquidity has been much worse. You know, I think the question from here is whether either we decide that the virus really isn't going to cause any trouble, and then governments and companies let us all get back to work, or we decide that actually, you know, we're going to be made to work from home, governments are going to shut down schools, which takes, call it 25% out of the labor force, and then you really do have companies with really quite tough periods of earnings, and then I think we've got quite a significant another leg down to go.
So, Luke, as somebody who is in the risk assessment business, which view are you handicapping?
The short version is, yeah, we got out of as much of our equity risk as possible. Yeah, there's a lot of money you can make in here. The stock picking is doing well here. The credit selection is really quite interesting, and I think the next wave of credit markets is going to be interesting. But at the moment, trying to be brave in equities feels the wrong thing, and we'll see as people, the big question here is not so much what the death rates from the virus are. That's obviously incredibly important for anybody individually affected by it. But it's really company reaction and government reaction. And as you start to get people sent home, like we're in the thought business, we can be as productive as almost any business when you send people home. But, we're testing having 300-400 people working from home today. And do I expect today to be as productive as a normal day? No, not at all. And if people are working from home in significant numbers, then that has a real impact on productivity. It obviously has a real impact on a lot of spending on service businesses, entertaining businesses, and that really will lead us a long way down on markets.
So, Luke, there are some investors out there, mom and pops out there, who are saying, you know what, I don't know if you want to say buy the dip, but they're saying, leg into this as equities continue to fall. It sounds like you're not in that camp yet.
No, I think while you've got this heightened volatility, the volatility needs to calm down for this to feel like a base in markets. That's a sort of simple version of the rule. While you've got this volatility, the market is in some form trying to choose which direction the next leg goes. And to something Joe said earlier, I suspect we'll test the lows again before we know where this market is.
Luke,
buying the dips has been a great strategy for years, but it's not always the right answer.
Luke, when you start to see this program trading or programmatic trading, is it based off of those commodity trading accounts, or where do you see these levels, and how do you pick levels, and how do you know how aggressive to be when the market's down? Are you still selling stocks into a down market like the rest of the people that I'm seeing?
Yeah, I think that's where this sort of the old rules are the best rules, right? The first cut is the cheapest. You had a chance to liquidate risk in the sort of first few days of this, where liquidity was good. You could get your risk cut down really quite quickly. Today, trying to move large size is hard. While obviously markets are trading, but if you look at the order book, the order book in futures is much lighter than normal. So, while the price is okay, if you want to trade significant size, that you're going to move futures a long way. So it's a little bit late to be that aggressive on moving positions here.
And Luke, we're also hearing about, relative illiquidity, even things like the Treasury market and trying to move size this week. Is that simply in the nature of one of these high volatility, high stress phases of the market, or is there something else going on that you think is impacting the liquidity of the markets, maybe just the very broad spectrum of probabilities that you laid out there in terms of the actual economy?
I think, look, it's normal in these types of environments. Once you get the volatility, bid offers go out, people's willingness to stand by their bid or the offer goes down. So that's normal market impact, I would say. One thing we all have to recognize is trading desks, the banks are all testing out their ability to work from different locations. People are starting to wonder whether they're going to have to trade from home, because going to if you've got a case of the virus on your trading floor, you can't then just move to another trading location. You actually have to trade from home to separate people. That is starting to make the trading desks at banks and in some of the other market-making type of liquidity providers a bit more spooky than they would normally be. Certainly nobody wants to go into the weekend with significant position. That all leads to a sense that liquidity goes down and you have to trade accordingly.
Hey, Luke, before we let you go, I know you talked about testing the lows. Do you think, is there a firewall here, or is there a low, at which point you just say this is where this is the line, just so I know?
Nope, would be my short answer to that. I think there's a point where our algorithms will naturally start to push to the downside, and other ones were, and you can somewhat see as we start to break that. Once we break that channel, then it's quite interesting to see how far down you could go if there's a wave of selling. That's only going to come if there's actually economic news that means that people are, that makes people worried about where earnings are going to be.
The reason
over
I'm
the
asking
next
this, Luke, is, and I don't want to scare the viewers, I just want to understand if, in fact, your employees and employees around the country or around the world rather, end up working from home, and there is a 3 or 4 week period a la China where people are not working the way they used to, what you think the genuine economic damage is, and therefore how that plays itself out in the stock market?
I think you get genuine economic damage. You start to see some businesses, we've got used to the idea that, nobody gets in much trouble because you can finance businesses so cheaply with rates so low. The reality is if you've got no earnings, every bit of debt looks expensive. So even a 4-week slowdown is significant. We've had people at home. Our Hong Kong office has been working from home for 6 weeks now. There's no great sense that they're about to get back into the office. So I'm not sure if people start being sent home, I'm not sure we do think it's a 4-week type of thing. It could be longer.
Right.
Now, as I say, we could all get comfortable that coming to work is fine, that the death rates outside China are really, not that bad.
Right.
And then you start to think, right, let's keep going as normal.
Right. If it was a 4-week thing, you might be buying a day, I think, Luke. You know what I mean? I think because it's already.
That's what I'm trying to understand.
Right. It's you're.
Yeah, I think, look, I think that's exactly right. One of the things which there is currently no evidence for is, so the Chinese have had people at home for 6, 7 weeks now, and that's clearly had a big impact on the transmission of cases. The question is what happens if they now let them all go about their normal business? Do the caseloads stay down, or do they start transmitting again very quickly?
Expected to start opening next week in China. Eunice Yoon's been reporting on that today, so we'll see what happens.